afternoon. So I decided to take a bit of a different approach with this presentation. And given that my background is in cloud, I'm sure the question is, why am I presenting on payments? But I've inadvertently had payment companies as my customers, and these problems were their problems and they became my problems by extension. And so my focus is not on the technology. I am a firm believer that our banks are doing a good job. We have our complaints, but they have constraints. And those constraints are what I want to dive into, because if you're going to have any leverage on these problems, that's what needs to be dealt with. So, Pure Infrastructure is an infrastructure as a service cloud consulting company. We've helped a bunch of companies with regulatory constraints. You're asked to move your workloads back into the country. You're trying to move some out of the country. How do you navigate that? So, I think about payments is that they're very intimate, they're very personal. And regardless of how you think about it, if you're a business, payments are the plumbing of your organization. As an individual, it's how you survive. And it's something that's sort of tangential, like it's secondary to core banking, but without it, the entire system fails. And so when I started thinking about this problem, the technology was never what frustrated me. And I'm going to use two examples of two problems I had. And the further I dove into these problems, and I actually include the links that sort of cleared up these problems for me, the more I realized that this is not a technology problem, and that Africa as a whole needs to focus on the regulatory cross-functional side more than the technology side itself. We have M-Pesa in Kenya. We're okay. We have PesaLink. The banks have come together, figured out how to move money 24 hours a day. But, if you want to move money to Burkina Faso, that starts becoming a tricky thing. And so I needed to send money to someone in the US. And one would assume that the US is sort of like at the frontier of tech, so everything works well. As I came to discover, it's a very fragmented country with quite, it's very fractured, is the right word. And so I couldn't find any bank that allowed me to log into online banking, and to date, by the way, and send money to this particular bank in the US. For me to do that, I had to physically go to a branch, fill out a form, and then the money will be sent. Here's the problem. The bank in the US is not a SWIFT member. So as soon as it's out of SWIFT, you're now in the ACH system, the automatic clearing. Automatic clearing house is this very old system that's been there, I think, from the 50s or the 40s. My memory may not be accurate, but effectively was a manual sorting center. And the logic behind that got carried into the tape days in the 70s. And the logic behind that is carried to date. And so payments, there are banks in the US that have refused to move to a fully online system. And so you have to, you can't force them to invest in the new technology. And so you end up in this weird situation where you have to use banks to hop to send your money. This was a very interesting experience for me because I just couldn't understand the problem. And then you start peeling the onion and you realize the fundamental issue is banks, as an example, have to always be backward compatible. So I'm sure there are people who know their parents here who will insist on signing a check for everything. And up until, I think it's 15, 20 years ago, when the check truncation system came, these checks had to be physically moved around. Banks still support that today. Banks still support, all this, the old EFT system of paying, which is based on the check system. It's still supported. And our banks have got significant constraints. And I was chatting with some, I think, Collins, and one of the things we were saying is a bank in Kenya today cannot extend its banking hours without CBK approval. And so these seemingly third-party constraints are what pigeonhole the payments solutions as we see them. And so, second, Visa is still cumbersome. Visa has done some, and actually one of the companies they say has done well is Visa. Reason I say, if you look at the tech, the way Visa started out in the 60s as this sort of project between banks to what it is today, a lot of the settlement is still fairly cumbersome. So if a bank forgets to, upload settlement record, you can lose money, which again happened to me. So you have a transaction, it's charged back, bank doesn't publish it. Next thing you know, a few $100s have disappeared, and then you're now down this rabbit hole again to figure out why hasn't the bank given me back my money? And then you realize that there's some parts of this process that still require human intervention. These are the problems that kind of need to be dealt with. But fundamentally, if you're the central bank, you can't force everyone to upgrade. You can force them to maintain what they have, but you can't force them to upgrade. So if you think about the smaller banks in Kenya, you're serving a small community, 2, 3 branches. No one is going to force you to jump onto PesaLink. No one is good. Like, there are many things you can just choose not to do. This fragmentation, balkanization, when put on a Pan-African scale, now at least in the US, the rule is that 75% of the banks need to agree to force a tech change. In Africa, you can't force anything. So if, let's say Ethiopia with its system and currency controls comes in, we can't do much to fix that problem. And that's where a lot of the friction lies. So these are some of the things I was covering. So if you look at something that, again, you go back, the Russo-Ukrainian war, suddenly you have whole chunks of the economy kicked out of SWIFT. And it doesn't matter, again, what you think about the cross-border payments. Once the thing is knocked out, whatever technology you had riding on that, again, things like Visa, etc., ride on that as a final settlement, they're out of the system. Forex will eternally be a complication because, the bank makes margin on that. Some countries control it. So again, Ethiopia has significant currency controls. We had our own version of that recently, where even if you wanted to send money to someone abroad, the bank actually couldn't give you the currency. And I had this experience where I was trying to send money to a supplier, and the bank told me to stagger it over a month and a half. And you just, like, this is not a technology problem at this point. This is a government foreign currency issue. So forces for good. Banks want this problem solved. Card issuers want this problem solved. Apart from the political interference, SWIFT has been doing very well. I personally think that the sanctions were a mistake and will balkanize the world further. But like at the whole, they've been very good at solving this problem. And connectivity is ubiquitous. And we're getting to the point where in Kenya, at least speaking, you can get payments from other parts of Africa, like over the weekend, because not all banks turn off their transmissions and money can come in. We are making progress. Telcos, as usual, have to mention M-Pesa. They're uniquely positioned to solve some of these problems because they're in multiple countries. Everyone has a phone number. The phone number is a unique identifier, can be used to send money to everyone. The likes of Apple are coming in, Garmin, etc. So you're finally going to be able to sort of pay using your card and other affiliated things anywhere. And when you look at Visa again, I don't know if I have another slide here. I'll get to that. And then finally, you have the likes of blockchain, etc., which have been used to evade sanctions. Not necessarily a good thing, but it's a path. But at the end of the day, in trade, there's this thing known as non-tariff barriers. This is the equivalent. Technology is not the problem. I can move money today to anyone in this room. You can then move that money to your bank, and you can move it to within certain constraints, many other people. The issues you now face are costs, compliance, like the bank requires information depending on the amount, all these other things. And I feel that we focus more on the tech instead of actually dealing with these core problems. Because at the end of the day, our banks, given the regulations they're facing, given the global regulatory environment, anti-money laundering, etc., we have a fairly robust system. But we like sort of poking the banks, not realizing that if you were to run with your hands tied behind your back, you probably will struggle a lot more than the professionals who figured out how to navigate this environment with these constraints. And finally, like the software-based integration. I love what Visa Direct is doing because they finally figured out, hey, everyone has a debit card. Why can't we just move money in between? Now, currently, the challenges are, local banks are not supporting it. Some of them are supporting it. So there are weird issues. Currency conversion, obviously, is another one. But the beauty is Visa has a standard rate. So as soon as more and more banks come in, the technology behind this, MasterCard has a similar product. A lot of this will allow movement between debit cards globally, which just completely changes the payment landscape. And it's cheaper, it's real time. And then you've got something that Finastra is doing, which I found to be very interesting, which is basically like a integration cloud portal, where if you want to integrate with a certain bank, they've made the process easier. If you want to integrate with an aggregator, they've made the process easier. And this documentation and simplification of APIs will actually serve to accelerate uptake of payment solutions on the continent. And then the final slide is basically my research. So there are two very long podcasts, and you can actually read them on the history of Visa, history of payments in America, and it basically ties into why we in Africa have similar challenges. It's exactly the same balkanization problem, which is how do you get actors who have no real incentive to cooperate. And if you think about it, I, I have no, I know this is going to sound bad, but I have no business in Burkina Faso at the moment. The only reason I'd be sending money to Burkina Faso is if somebody in my family is stuck or if I needed to do business in Burkina Faso. Another part of the continent, they're not a natural trading partner. At that point, that payment is very personal. Like at that point, it's an emergency. And that's the point at which I'll start running into all these other strange barriers, which was my experience, ironically, sending money to the US, where I ran into all these challenges and some banks could not help me. And I'm like, okay, fine. I ended up opening an account with another bank because they could help me, but they required me to have a bank account open. And that's, I think, is where most of the friction lies, not on the technology stack level. We have the tech works. We just need to figure out cooperation. Thank you.
Any questions? Any questions that we might
Yeah,
have
actually,
for our speaker? We'll just take maybe one burning question.
because we have the panel after.
All right, so that looks like it's a yes, Mr. Theory.
You've mentioned repeatedly that technology is not the challenge or the roadblock in terms of the balkanization we have for payments.
Yeah.
But how can technology be the solution to overcome some of these challenges? If there are challenges with regulation, if there are challenges with we don't trade with Burkina Faso, how can technology help us? What the one day when my cousin is stuck in Burkina Faso, I can send him money.
Yeah. So I sort of tried covering that. I just didn't go into great detail. And the example I gave like is Visa Direct, where you use the rails you already have that exist into that market to facilitate near real-time payments. So for instance, something every country either has Union Pay or Visa. You're in one of those camps. North Korea, you have Union Pay. Outside of sort of like the Chinese, Russia sanctions wall, you have Visa. Many banks in Kenya are interoperable with both. And so and that's why I like Finastra. What you're seeing more and more of is building technology on top of existing rails. So the way, if I have money in PayPal, Equity Bank has gone and integrated with PayPal so that now anybody with an M-Pesa account can get access to that cash. But the backend is PayPal. And it's the same thing that Visa Direct has done with, what do you call this? There's this yellow money transfer service at the tip of my tongue, Western Union. Western Union if you do a Visa Direct transaction on Western Union, it's routed through Equity Bank and from Equity Bank via RTGS to your bank. So effectively what's happened there is Equity is using existing rails to reach people who otherwise wouldn't be reachable. So you can actually send a payment to the Central Bank of Kenya, which from that system, because now Equity can display can surface the local banks on our payment switch. And it's just building on top of these rails. That's my view.
Okay, this is the final question in the interest of time. Thank you.
Do you think that crypto in Africa will ever be standardized as a mechanism to avoid or circumvent these regulatory challenges you've spoken about?
I don't think so. Here's the thing. Crypto at some point has to become tender. Legal tender is issued by the government. And at that point, regulation kicks in. Like that's a problem. So long as you can keep it within that network, you're fine. But the point at which you say, I have Bitcoin, I want to liquidate this Bitcoin to buy a car, then the bank will ask you, where is this money from? And you're back to the same problem. So crypto can be used to some extent. That's why I said to some extent, it can be used. I am not sure it's a complete panacea because we are beginning to run into weird challenges. For instance, the blockchain being immutable was viewed as a virtue, and now the FBI basically goes back to see who sent money to who when, and you get arrested. So it's not anonymous. So it's even worse, I'd argue, than a bank because it's public. You don't need some weird court order or something. So that's the challenge. At the end of the day, just it will need to come back into the legal system. And at that point, you'll need to explain where the money is from. You'll need to pay taxes on it and all of that. So it's, again, regulation. Yeah. So the panel. Okay. Thank you. Thank you,